Well, good afternoon, ladies and gentlemen. My name is Taka Akamatsu. I'm in the RSTD. I guess there are many guests from outside. The RSTD stands for Regional and Sustainable Development Department. This session, we are to discuss, the title is Remittances and Access to Finance. And we are here to discuss the issues in access to formal remittance services. To me, it sounds very much like a banking services, but it's a little beyond that, I think. And, but nevertheless, I think it has a lot to do with some policy framework, the legal framework, regulations, etc., to some extent, or even some business practices, in my mind at least. And I think all of us perhaps reasonably accept that the laws and regulations are there for, with a good intention. But we also, many of us, I guess, suffer with these things called laws and regulations. It can be impediments in many cases, and it could translate into higher transaction cost, and even to some extent, some inconvenience, etc. So of course, to really promote remittances, which are to come in a small amount, I think the authorities, market participants, users, all of us have to make a lot of effort and push this envelope and then enhance the access and the usefulness and the cost efficiency, etc. Personally, you know, I'm very, I feel very fortunate to participate in this particular session because I have a lot of questions. I have a lot of issues in my mind. Which we struggle in those formal financial services such as banking. One example, payment, remittances may quite likely, and most usually, can be seen as part of a payment service. The payment service could fall under the definition of banking service under the banking law. And the banking law is one of the most stringent legal framework for business services. Banks are banking services not for everyone. It's only for licensed institutions. And the licensed institution has to prove themselves as a very sound and competent institution. And plus, if anybody is licensed as a bank, it has to have a high capital to be a sound institution. And all that add up to transaction cost. Does it really make sense to support a small amount of remittances? Or can authorities think of a different form of financial services? Maybe sort of a limited scope banking services with much less stringent requirements, etc. And of course, we also hear all about those telecom companies supporting payments, etc. But all that kind of interact with this legal and regulatory framework for formal banking and financial services. So those are just a few examples that comes to my mind immediately. Now we are very lucky to have leading experts on these issues, particularly in the context of developing countries. We have two experts to share with us some country experiences. Firstly, Mr. Ahsan Ullah, who is the executive director of Bangladesh Bank, the central bank of Bangladesh. And then we have Madame Pierre Bernadette Roman Taya, who is, of course, well known in the Philippines, but also actually around the world on this subject of remittance and microfinance. She's inclusive finance advocacy, the head of inclusive finance advocacy of Banco Central of the Philippines. And then we have our colleague from ADB, Betty Wilkinson. She's a director of South Asia division responsible for public sector and financial sector operations. And she's also personally known as one of the leading experts of this microfinance, the businesses. So let me first invite Mr. Ula to give us and share with us his experience at the Bangladesh Bank. Please.
Respected session chair, the commentators on the podium, distinguished members of the House coming to witness this my presentation and other presentations on remittances. I am from Bangladesh. That is the reason why I have started with the introduction of Bangladesh. See, so Bangladesh is one of the important countries in the world who have achieved a renowned achievement in the field of remittance, you see. But before embarking on the subject itself, I'd like to give you a snapshot of the total remittance scenario of Bangladesh as a whole. Bangladesh is a small country in respect of its size, but it does have a very big population, about 160 million. And you will also be amazed to know that around 9 million of them spread all over the world, who are popularly known in my country as the non-resident Bangladeshis, that is NRBs. And out of such a big number of NRBs, most of them are in Arabian countries, largely unskilled, marginal, small farmers coming from rural areas. Most of the non-resident Bangladeshis in Europe and USA are semi-skilled and skilled. Remittances contribution to GDP is over 10% on the average for the last 5 years. Remittances are rendering balance of payment support to reduce trade gap. Non-resident Bangladeshis have made significant socio-economic impact on the community as well as the household levels through improved standard of living, higher investment in children's education, increased spending in healthcare and social security, higher investment in income-generating activities like SMEs and other agro-processing activities. This is a brief outline of the remittances flow. You see that over the last few years, the remittance flow is increasing in Bangladesh. And you see the graph, it is increasing and increasing, excepting only 1 year, you see. And that was a specific reason, but the remittance flow is on the rise. Remittance by region is that we have segregated, first of all, with Middle Eastern countries and other rest of the world. In the rest of the world, the remittance trend is increasing, and the Arabian country, it is sometimes increasing, sometimes decreasing. Now it is in the increasing trend. And you see that in the West remittance 2014, it was more than 14 billions, and more in the Arabian countries, particularly in case Saudi Arabia, 21%, 22%, United Arab Emirates, followed by Emirates, and next by USA and other countries. And you see that in this table, I'd like to relate it to the share of remittance to the other macroeconomic indicators. And you'll be surprised to know that since 2008-9, you see the contribution of remittance to GDP is increasing. Remittance to export, remittance to import, remittance to aid, and remittance to FDI, these are all comparatively increasing. And among us, the 10 income remittance recipient countries, Bangladesh's position is 8th, followed by Pakistan. And very important questions are coming in with regard to the remittance costs. And you see that over the past few years, the cost of remittance is gradually decreasing. And remittance cost in some corridors, you see, particularly in the corridor Bangladesh to Singapore, it is the lowest. In other countries, it is higher. And in the high cost corridors are the Canada to India, Germany to India, so on and so forth. Recently in Bangladesh, Bangladesh Bureau of Statistics has conducted a survey with regard to the household expenditure pattern of these remittances, and it was found that the female overseas goers number is very few. They constitute only 2.6%, while the male constitute 97.40%. This may be because of the reason of socio-cultural condition of my country. And the remittance receiving behavior is something like that. The spouses get 55% and the parents get more than 44%. And with regard to this non-resident Bangladeshi remittance behavior, the saving behavior is that they saved out of their remittance only 16%, and they spent 84%. And you see among the expenditure pattern is that durable and others, it is 34%, and the food items, they spend 33%, and non-food, they spend 32%. And the saving behavior of the NRBs, I already mentioned that in the recent survey, that 84% of the total remittance savers keep their savings in banks. You see, in Bangladesh, unlike the other countries, people has got full confidence in the banking system. So saving in the savings account, it comes around 66%. Bond purchase, it comes around 55.79%. In deposit pension scheme, it comes around 7.13%. And time deposit, it comes around 5.02%. This is the savings behavior of the NRBs. It has been found from the recent survey. And you see that the popular mode of sending remittance in my country is 76% is through the Western Union. You are very much all aware of this remittance sending organization. And then comes MoneyGram and the post offices through banks. And through the banks, the percentage comes to 67.32%. Friends and other relatives, known persons, Hundi, it constitutes only 10.04% and others 1.1%. I'll be coming back to Hundis, how it has been addressed in Bangladesh, because the quantum of Hundi has drastically come down because of some measures taken by Bangladesh Bank. And remittance arrangement, you see that unlike other countries, our model is bank-led model, and we have got a remittance arrangement system, you see, particularly with the Arabian countries, because most of the Bangladeshi expatriates are concentrated in Arabian countries. That is the reason why we have made some remittance arrangement system with them. Our Bangladeshi banks made the arrangement with the exchange houses of those countries, and ultimately through that arrangement, we receive the remittances from the remitters hassle-free within a very short period of time. And in the next slide, the drawing arrangement with which countries we do have the drawing arrangement, it is not that much important because the highest number comes this United Arab Emirates, then Oman, Qatar, so on and so forth. And despite all these drawing arrangements system, we do have also some exchange overseas exchange houses. And through these overseas exchange houses, we also get a lot of remittance monies, and they are in Canada, Italy, Malaysia, Maldives, Oman, Singapore, UK, USA, South Africa, 35 in number. And remittance distribution network comes something like that, 21 banks, and in the 21 banks, you see mobile banking is also there. You see, next time this mobile banking, I'll talk about this one. And NGOs, that is microcredit institutes, they are also included there. And even the big shoppers, big shopping malls, you see, there is Singer, the big shopping mall, it has also been included for distribution of these remittances. And you see, in Bangladesh, throughout Bangladesh, we have got a network of post offices. Even the remittances could be sent to the post offices. So the remittance environment there in Bangladesh is very conducive. I told you that more than 10% has become the hundi issue or hawala, and it was more than 25% unofficial a few years back. But because of some measures, particularly stringent measures by the Financial Intelligence Unit, at the same time, we have profusely given the drawing arrangement with the other countries so that the people are more interested to come through, sending their remittances through the banking channel instead of using the hundi or hawala because it is not free from risk. So we have achieved very good result because of this profuse license for giving this drawing arrangement and other arrangements like other banks. Now, investment facilities is a perennial question with regard to the investment facilities. We give a lot of investment facilities to the NRBs, and one is the NFCD, that is the non-resident Bangladeshis can deposit their currencies, hard-earned foreign currencies in terms of US dollar. And out of that, they get coveted interest. And we have got wise earners development bond. In that bond, the investors, foreign NRBs can invest. We have got US dollar investment bond. These are very lucrative. We have got also US dollar premium bond. This is also very lucrative. Investment in shares and securities through NITA, non-invest taka account. They can invest in shares and securities in our countries. Even in order to persuade the investors, you see, the NRB investors, they are given some incentives with regard to the government plot. They have got certain quota, and they have got 10% reserve quota for non-residents, and Bangladesh, and they can also participate in the IPO, primary IPO shares, even in respect of investment in the export processing zone, they have given the preference. I told you that government's policy is to ensure inclusive economic growth. This is the national policy. In the budget, the finance minister has categorically mentioned that our economic policy is inclusive economic growth. And in line with the government's policy, Bangladesh Bank, the central bank of the country, has included financial inclusion in its monetary policy statement for inclusive growth. The objective of financial inclusion is to bring the unbanked, the low-income, poor, weaker section of the population under the umbrella of formal financial environment at an affordable cost. Again, the supportive environment, you see that Bangladesh government has also taken an initiative to digitize the entire country. So this is the slogan and the declared agenda of the government is the digital Bangladesh. They want to make the entire country digital by the year 2021. This is the government's policy. And this policy has paved the way for the ground for this remittance. You see, digitization of the financial sector with advanced infrastructure. Because of this government digitization agenda, there has been an infrastructure of digitization throughout the country. And in the payment system, a fully automated online settlement electronic fund transfer system is on board now in my country. And the cell phone system is very popular in my country, and SIM cards are available at an affordable price. Minimum subscription for opening bank account for the farmers in the rural areas. You know that I told you at the very outset that the NRBs, most of them are from the farmer families, And they have been given an opportunity to open a bank account with 10 taka, only 10 taka, some cents. Not only that, government established IT-enabled Union Information and Services Center, operating all about more than 4,547 Union Parishad. Union Parishad is the Upazila level lowest tier of local government of the country. Large distribution of network of MNOs, NGOs, and GPUs. In my country, you see that microcredit institutes are very popular, and the network system, that is mobile network operators, are very much popular, and they have got a very good networking system. NGOs are hundreds of thousands of NGOs are there, and post offices are there spread all over the country. So these are the enabling environment which has prompted to send the remittances through these organizations without any hassle. Now, the benefits of financial inclusion is mobile financial services is there. And I told you that 10 taka accounts for the farmers, 10 taka is equivalent to some cents. And there is also a system for school banking. If the students who are going to school from 6 years to 18 years, they are being encouraged to open account in the bank so that they can become financially literate from the very beginning from the school. And there is also agent banking system in the remote rural areas. You see that there is no bank's existence. And in order to facilitate the remittance recipient families at the very rural areas, agent banking system has been introduced by the central bank. And we have got a clear-cut policy who will become the agent bankers and how would they provide services to the remittance recipients. And one thing is that among these this mobile financial services and agent banking, these are fully digitized financial services. And use of mobile phone, I have deliberately coined this slide because you see that Thailand is the highest mobile user country in the world. You see, their percentage is more than 100%. Somebody asked me the question, how come it become the more than 100%? I said it is because maybe that one is used more than one mobile or something like that. In Bangladesh, it is more than 68%. Around 68% of the country's population as active subscribers created an unprecedented opportunity to deliver basic financial services using the mobile phones to the financially excluded population. It's an advantage for us. And regulatory framework, since these mobile financial services are being extensively used for remittance, it's inward remittance particularly, you see that we have formulated from the central bank clear-cut guidelines how to use these mobile financial services. And I told you that our model is a bank-led model, that is no other organizations other than the bank can operate for these remittances. And distribution network, I already told you that it is spread all over the country. That is, MNOs are there, NGOs are there, and post offices are there. Then how does the bankers gain from the MFS? The increased number of customers which ensures new source of deposit, the bank's deposits are increasing, new source of income, countrywide coverage at a minimum operating cost. These are the gains from the banker's point of view, and from the customer's point of view, they are gains. Safe deposit of their money and earning interest on it. Daily transactions in the account of 24 hours daily transactions take place over the 7 days, day, night, 24 hours. Sending and receiving local remittances instantly. Instantly you can get the remittances because you see, you can get the remittance service providers at the doorstep of our house. receiving inward foreign remittances from a walking distance, hassle-free. There is no hassle, nothing like that. Current status of MFS in Bangladesh, number of banks got NOC, 28 banks got the NOC, and their branches are more than thousands of branches are there. Number of banks launched MFS, that is 19. Number of agents, you see that number is very big. You see 5 lakh 40,000, something like that. Number of registered customers in the MFS is 25 million. Average number of transactions per day is 2.4 million BDT. Average volume of transactions per day is 3.49 billion taka. Now I'll be coming to something different which you have not heard about from any presenter here. We have got some specific banks for the NRBs, non-resident Bangladeshis. You see, one is NRB Bank, another is NRB Global Bank, another is NRB CB, NRB Commercial Bank. One of the objectives, recently these three banks have been given permission by the central bank. One of the objectives of these NRB banks is that the NRBs, the remittance senders in abroad, they are the owner of these banks. And one of the objectives of these banks is to send more remittance from abroad because they are directly involved, they are the owners. So in order to facilitate them to send increased amount of remittances from foreign countries, the policy has been taken like that. And the most important policy in the banking sector has been done by establishing a specialized bank for NRBs. That is, it's a specialized bank for NRBs, particularly the poor people who are going abroad, they do not have sufficient cash money with them. So the NRB bank is there in order to provide them the funds so that they can go with the money, taking loan from the bank. The interest rate is very low compared to the normal commercial interest rate. It is interest free. It is a collateral free. Collateral interest rate is low. And even its objective is that once the NRBs, after rendering 20, 15 or 30 years service over there, they come back. They become old, you see. So they need to be rehabilitated. So there is a rehabilitation loan or return migration loan is there. It is also given at a very cheaper rate. These are the objectives of this National Specialized Bank for the NRBs. This is popularly known as Prabasi Kalyan Bank, that is Expatriate Welfare Bank. So this is a special bank for the expatriates so that they can get loan at a cheaper rate at the same time coming back to the countries, returning from abroad. They can also take loan at a lower interest rate so that they can go for SMEs and other bankable projects. If the overall economic situation of Bangladesh has improved a lot because this remittance has helped us a lot to improve the economic condition of my country. And you'll be surprised to know that the foreign exchange, the reserve position of my country has gone up, tremendously gone up because of the foreign exchange remittances. You see, even you see that 2001, it was only less than only 2-3 billion or something like that. Now it is almost 23 billion US dollar. This is our foreign exchange reserve. And these foreign remittances, they contributed a lot in order to increase this foreign exchange reserve. And the recent achievement because of these remittances and for other factors as well. But remittance is one of the biggest contributing factor, you see, for the overall economic development of my country. You see, the recent development is that GDP growth rate, you see, there is a comparative study. In 2009, it was 5.74%. Now it is for the last few years, you see, it is 6 point more plus. So we have been having experience with the GDP growth rate 6% plus over the last 5, 6, 7 years, and this remittance does have a contribution to that one. FX reserve, I have already told that it has tremendously increased, and the change increase is the 199% increase over the last 5 years. And foreign remittance, you see that its increase is 47% over the period of last 5 years. And balance of payment, you see this situation in terms of US dollar, it has increased 166%. And poverty headcount ratio, you see that poverty has reduced. Formerly in 2009, it was 31.5%. Now because of that, poverty has reduced to 24.12%, and we have reduced poverty by 7.38%. And you see that there was always a question with regard to the protection of the interest of the remitters, you see, and the central bank has taken a lead in this respect. You see, we have established a new department. This is called Consumer Protection Department in Bangladesh Bank. So that is and in the Consumer Protection Department, one is the Customer Protection Cell, and most of the complaints we get from the customers. Once we get the customers with regard to the remittance that they are being in a problem, that is some problems are created for their remittance, immediately we just take action on that one, and a lot of people are deployed for that one, so that the remitters never suffer for that. That is the reason why we have established in the central bank Consumer Protection or the Customer Interest Protection Center, and it has got a special number. There is a hotline. Anyone, anytime, they can complain. The way forward is taking initiative to increase the number of semi-skilled and skilled workers instead of present unskilled workers. You see that from Bangladesh, about 9 million people are there, and compared to that, our remittance is smaller. Had there been skilled or semi-skilled workers more than that, we could have earned more. That is the reason our way forward is to increase develop the number of skilled and semi-skilled workers. For this purpose, you see the Bureau of Manpower Employment and Training has taken a massive program for skill development. This is the government organization. They have taken a massive initiative in order to increase the skill development of the foreign-going employees. Exploring new labor markets around in addition to the existing markets. You see that our Bangladesh labor market, expatriate market, is concentrated mainly in the Arabian countries, you see. So, but ultimately, it's not a good sign that we are also exploring the other markets. Another important thing has come up very vigorously with regard to the reducing the cost, migration cost. We are also taking initiative to that one, and Bangladesh remittance cost is one of the lowest in the world, you see. And recently, you see, we are sending the employees, workers by government to government. You see, the remittance cost has become, particularly sending cost has become very low. It comes around 35,000 or something like that, around less than $1,000, less than $1,000. You see, and another thing that with regard to this long-term perspective, you see, the government is planning to float sovereign bond targeting the NRBs for the non-resident Bangladeshis, so that they can invest in the bonds. We are planning to float this sovereign bond like the diaspora bonds. With these few words, I would like to conclude inviting questions from you. Thank you very much.
Thank you very much, Mr. La. Certainly, this was a very enlightening presentations. The Bangladesh has certainly made a series of efforts in making microfinance services and the remittance services more convenient, more user-friendly, more accessible. But always the challenge is how to reconcile all that with appropriate consumer protection. I'm sure you have a lot of kind of issues coming to your mind, but let's continue with the presentations. The next is Madam Taya from Banco Central, please.
First of all, thank you to the Asian Development Bank for organizing this very timely and important forum and for inviting the Bangko Sentral ng Pilipinas in this forum. It is an honor for me to be here. I'm happy that I'm presenting this perspective following the session earlier, which presented us with a lot of very useful deep dive surveys and studies into the needs of the overseas Filipinos and their beneficiaries for financial services. The results that were presented earlier really feed into what I will be presenting today. How does policy and regulation address the many barriers that were discussed in the earlier session? So I will start with my presentation with just two macro slides just to remind us of the importance of remittances in the Philippines. Of course, as was mentioned earlier by Deputy Governor, it is now remittances channeled through the formal financial system is now 8.5% of our GDP. You can see in the graph the increasing amounts, the increasing trend. And this is a pie chart that shows the total cash remittances and the mode of which they are sent. And this is from our Philippine Statistical Authority, the survey on overseas Filipinos. Again, banks and others here are also the financial part of the formal financial system. But these are really just introduction slides. What I will present today is looking at remittances as a doorway to financial inclusion. Mr. Akamatsu mentioned earlier the importance of payments and its relation to real banking services. We see that remittances or payments is really a first step or a doorway, if you will, into other more value-adding financial services that can really have long-term impact and benefit on the individuals. And in looking at this relationship, I want to focus the examination on savings, in particular because in accessing loans, for example, some financial institutions look at client behavior in terms of savings in granting loans as a consideration. If you can also see savings as a leading indicator to investments, or at least the growth of savings. So it's a very important link to the actual sending and receiving of remittances. And in looking at savings, I want to highlight three things. The first one is that there's already some good work and good results that we can see at the moment. Number two is there are opportunities or challenges, depends how you want to see them, but hopefully opportunities. And finally, what does this have to do with financial inclusion? So first, remittances and savings. There is already some good work being done, some good results that we could see. The World Bank Findex, for example, asked the question, and this is a survey, a nationally representative survey, asked the Filipinos, what do you use and why did you open a formal savings account? And if you will just see in the chart, the highest one here is to receive remittances. So there's also now an importance in opening an account to be as a function of receiving remittances. So we think that is a very good indicator. The BSP also conducts a regular sort of product catalog of our banks, and we ask them, and this is in the relation of our work in financial inclusion, we ask them, in your savings products, in your innovative savings products, what are the markets that you target? And if you again look at the graph here, the one on the rightmost is for overseas Filipinos. So that means our banks are currently designing some of their savings products, taking into consideration the needs and wants of our overseas Filipinos. So that is, again, a very positive development. If you look at the linkage here, the graph on the left shows us the percentage of OF households allocating a portion of their remittances to savings. Again, the increasing trend from about just 7.2% in 2007 to 42.1% in ED 2014. The graph beside that just shows the correlation between remittances and the number of deposit accounts per province and per region. So we just tried to correlate the two indicators, and we saw that there is quite some strong relation between the number of overseas Filipinos in an area and the number of deposit accounts generated by that area. Let us go now to some of the challenges, or I would like to call them opportunities. The first graph on the left shows whether the OFs have savings from cash remittances. So the blue graph show with savings, and again, that's why it's a challenge and also an opportunity. There is a greater proportion that do not have savings. The second graph now shows percentage of cash remittances set aside for savings, and the biggest percentage here are those that save less than 25% of the remittances for savings. So while there is an increasing trend of overseas Filipinos with savings, it's still a mixed picture, and there's still a lot of room for improvement. This is, again, a segmentation of the regions, and we tried to analyze the total cash remittances per capita, and that's using the remittances in the last 6 months per number of overseas Filipinos in that region versus total deposits per capita in that region. And we just want to see if there is a relation between the average amount of remittances and the average levels of deposits. And this will present, again, an opportunity in areas where the average amount of remittances are actually very high. Why are the average deposit rates very low? Or hopefully it's channeled to investments or productive activities, but it is still worth studying, giving this information. So again, those are the two things I wanted to highlight with the relation of remittances and savings. But how does this all fit in our context of financial inclusion? But maybe before I discuss this, let me just segue into a definition that we use within the BSP, and it's also widely accepted globally and also in the Philippines. It is a state wherein there is effective access to a wide range of financial services for all. And highlighting here is effective access. We don't just need that there is an access point or a place to go. It has to be a place where individuals can actually get products that they want, that they need, and that they benefit from. And it is a range of financial services. So it is not focused just on credit, it is not focused just on savings, but the broad range of services needed by the various markets. And why is financial inclusion very important? We can really highlight its benefits at 3 levels. The household or small enterprise or enterprise level. It allows households to seize economic opportunities. It increases output and productivity. In the financial system, there is also now an increasing body of literature showing that a financial system that is able to mobilize a broad base of savings and invest in growth and productive sector is a more resilient and stable one. And of course, we're all talking about inclusive and broad-based growth as a strong fundamental for sustainable growth. And here we can see within our Philippine Development Plan, it is envisioned that a regionally responsive, development-oriented, and inclusive financial system is one that provides for the evolving needs of its diverse public and supports inclusive growth. So the Bangko Sentral ng Pilipinas looks at financial inclusion and undertakes initiatives focused on 4 areas. It's policy and regulation, financial education, consumer protection, some advocacy programs, and an enhanced internal data and management capacity. I will focus today on the policy and regulation. Deputy Governor Espinilla this morning touched upon our consumer protection and financial education initiatives. And in the policy and regulation, I will focus on access and products. Okay, as I said, access alone is insufficient. We need to have products that are responsive to the needs of our market. And in this space, we've issued regulations that have widened the range of products that are fit for the market we are trying to serve. Micro deposits, for example, are like no-frill accounts. We heard this morning and in the panel before that a barrier to opening a savings account may be because of opening account fees or minimum balance fees or dormancy charges. So we have set regulations that have allowed no minimum balance, or at least if you want to set a minimum balance, it can be no higher than 100 pesos, no dormancy charges. And so it addresses some of the barriers that we also learned in our study and our research. Of course, our micro enterprise loan, this is a product again of extensive study and also coordination with the market to develop what are the regulations that will promote microfinance loans and microfinance technology being applied to housing, micro-agri, and we also now allow our banks to distribute microinsurance. So this range of products, if I can tell you, there are now 179 banks from none in 2000 with microfinance operations currently serving 1.2 million clients. And the outstanding portfolio is 9.4 billion. And this is outstanding. So if we consider, these are short-term loans, 5-month loans, 6-month loans. If we consider the amounts disbursed over time since we started microfinance in 2001, it will be a very significant amount channeled to these micro and small and medium enterprises. So that is the graph showing the increase in terms of loans and in terms of clients. And the bottom two just show you that as a policymaker and a regulator, our primary mandate is really to ensure the safety and soundness of the financial system. But we realize that it is not exclusive of a financial inclusion policy. Both can be approached and both can be actually pursued alongside each other. And the graphs below just show you that the banks engaged in microfinance are no less profitable than those that don't, and and the quality of their portfolio are actually a little bit better than their peers that are not serving microfinance clients. So definitely the stability and the inclusion can really be pursued alongside each other. So this is in terms of products, in the way that we want the banks to be able to have enough flexibility to design products that are needed by the markets that they are serving. In terms of access, we mentioned earlier, we are an archipelago of 7,100 islands. 37% of our country are unbanked. Okay, so there is no banking presence in those areas. What we have allowed is the establishment of micro-banking offices. And again, the Deputy Governor mentioned this earlier, but I just want to highlight that some of the areas that are unbanked actually can be banked feasibly if you lower the cost to the banks. And this is what the MBO policy tries to address. An MBO can be a small room with 1 or 2 banking personnel that can deliver a suite of financially inclusive products such as the ones I mentioned earlier. And it is also targeting overseas Filipinos and their beneficiaries in that they can be remittance cash out points, as well as can do some level of foreign currency conversion. The increasing number of MBOs are evident in the graph on the screen. And what I want to point out are actually the 62 municipalities, and they're the yellow parts in the map. These are municipalities that did not have banks before, but because of this policy are now banked by MBOs. So now they are enjoying some banking presence through micro-banking offices. But aside from brick and mortar, this will always limit us in terms of access points to financial services. What we have also done is increased the virtual access to financial services. And this is through the issuance of our electronic money regulatory framework. Basically, electronic money is just a store of value, is a value stored in an electronic device. It can be a card, it can be a mobile phone, it can be a chip. It is not considered a deposit, and so our regulations are more light-handed and not too heavy, as also was referred by Mr. Akamatsu earlier, so that it can be more, it can expand faster and still in a safe and sound manner. And so we have electronic money issuers that are non-banks. So our colleague from the Bangladesh Bank, they follow a bank-based model. In the Philippines, we have a bank-based and a non-bank-based model. And the non-bank-based model could be a subsidiary of a telecommunication company or a purely electronic money issuer. And what this does is actually provides people with a transactional account. So it's a payments account. So you can go to an agent of an electronic money issuer and say, I have 500 pesos, can you give me 500 pesos in electronic money? So it's a prepaid arrangement. And that electronic money in your mobile device, you can now transfer through text or to someone else. So this, in effect, really translates into a transactional account, which we hope can be linked eventually to a savings account. And some of our banks now are linking up with electronic money issuers so that their clients can deposit, can pay their loans through electronic money. So right now, and the graph on the left shows you that there are now 10,000. There are 24,000 agents, but their active agents are about 10 to 12,000. But we want to just compare this to the 9,000 banking offices. And these 9,000 banking offices have been built up over 120 years of banking in the Philippines. And the electronic money agents have been built up only in the last 5 years since we issued our electronic money circular. So it is really something that will have very wide-scale adoption, because of the access points can really be ubiquitous around the country. And we are quite confident that with the right environment, the Filipinos will take up on this. Because as you know, we are sometimes dubbed as the texting capital of the world. A lot of us have mobile phones or send text messages. For those of you who have been in Manila long enough, you will see that. Recently, we've also been dubbed the selfie capital of the world, I think. And in terms of social networks, for example, I think 93% of our online population have a Facebook account. So these are just indicators of the, you know, the ease in which Filipinos adopt to these mobile technologies. And if we can harness that in providing them the information that they need through financial education, for example, delivered through mobile phones, or to actual access of financial services, I think the effects could be tremendous, and as the Deputy Governor mentioned earlier, positively disruptive. Again, you will see the volumes also increasing of our electronic money figures in terms of volume and in terms of amount. So basically, I've explained to you some of the products that we have allowed the market to develop and to deliver, as well as the access points in which we wish they would be delivered. And hoping to increase more of these access points to reach more of our unbanked population. And maybe I can just explain. And this is a map that shows progression of the Philippines considering the presence of access points. So the first one is the map, the complete map. The second one takes out the cities and municipalities that already have banks. So then it's a better picture. But the final picture is the most promising one, because this now considers the remittance agents, the electronic money cash-in, cash-out points, the pawn shops that are also now increasingly in the remittance business, and all other alternative service providers which can be part of this electronic money ecosystem, or what was explained earlier as a national retail payment system. So we will see it as bringing really more access points to everyone in the country. So our approach to policy and regulation has been really one that provides an enabling environment for the market to develop and to innovate. We try to address regulatory barriers and see where they could be adjusted so that we address what is what the market is facing in terms of difficulty in delivering certain products. We also emphasize the importance of research and evidence, and that's why I started this presentation citing that the previous session was very informative for me. In fact, maybe next month we will be releasing our first nationwide survey on financial inclusion. So this will be our baseline survey. And there is a whole section there on payments and remittances. So we ask a lot of questions on how often they send money, where do they usually send money, and again, all in the context of financial inclusion. So this kind of data generation and evidence gathering is really our key in evidence-based policy making. So working with the market is also one approach where we want to learn what do you want to do and how can we help you do that, instead of being very heavy-handed or restrictive at the onset. So our approach is really one where we want to set rules and regulations that are proportionate to the risks that you will take. So if you will just be doing payments or managing just the sending and receiving money, we will not impose to you the prudential standards that will be imposed on banks. So that kind of proportionate risk-based approach is really what we are adopting. And finally, in the policy making, coordination is very important. We see that there's a lot of initiatives already out there, and there's a lot of body of knowledge that we can also tap in our own work. And I think in the Philippines, we're very lucky that we have the Remittance for Development Council, chaired by, of course, our Honorable Secretary Nicolas, who is in this in the audience. And even for myself, when I sit in those meetings, I'm so happy to hear about some initiatives that we didn't know about, that maybe we could build on or maybe we could learn from. So I think this is, again, a very important venue for policymakers and regulators. So building on the learnings from the Red Sea, we actually are now in the process of creating a national strategy for financial inclusion. And this is really a venue for that very coordination and cooperation needed to really establish policy coherence and build on each other's initiatives rather than duplicate the initiatives. So hopefully with this national strategy, we can really go closer to our goal of providing effective access to a wide range of financial services for all Filipinos. Thank you very much.
Thank you very much, Madam Tayak, for really sharing a wealth of information and experiences. I feel like I have seen quite some common elements between two countries. Of course, two countries, to me, do share certain characteristics. Firstly, it's a pretty large country. Secondly, both are populated. This population density sometimes is an advantage in really expanding banking network, but it's not always sufficient. And they have both made a significant effort to really expand this reach of banking services, but including those more, the effort like use of the agents, or by use of micro banking institutions. The use of e-money or virtual banking and the cash-in, cash-out points, and then kind of giving a sort of recognition, regulatory recognitions for banks specializing in handling transactional accounts. And then both had this national policy and strategy to really promote financial inclusion. I think we need to digest all these a little more. But now let me invite our colleague Betty Wilkinson, who is one of our leading experts of this microfinance. Betty, can you please?
Thank you very much. I'm going to sit down just to make it a little more casual. I want to welcome all of you here We really appreciate that you've made the long distance trip to come and listen to this today, and I'm very, very pleased there's so many interested parties, particularly from Central and West Asia where I am. I'm pleased to see people from the Kyrgyz Republic, from Tajikistan, from Uzbekistan, from Pakistan, and from many of our other countries. Excuse me. And I want to tell you that the organizers, when they started, did not know this. But I have lived at least 5 years in each of these two countries. So it's a joy to me to see how they grow, how they change. I'm also happy to feeling pretty at home with these central bankers and interested in listening to their ideas. So my comments are going to be relatively brief because I know you have a lot of questions for these knowledgeable, excellent presenters. With regard to Mr. Asan's presentation, Mr. Ullah, he put us in the context. He told us about Bangladesh and told us about 6% of the population is abroad, and they're split between unskilled and skilled workers. At 10% of the GDP, remittances are comparable to PIA's information on the Philippines, and the effects are higher investments in education, in health, in savings, and microenterprises, as well as increasing the foreign exchange reserves of the country. So they pretty well share that in common too. And he also showed us what's happening on the remittance from locations, who sends them, who receives them. So I'm wondering, how does the origin of the remittances affect the size, the frequency, and the cost? We're certainly seeing the number of remitters are higher in the Middle East, but the amount of the remittances is lower. And remittance growth is declining in Bangladesh in terms of the rate of increase. It went flat last year. We might want to ask about that. And if remittances are supporting demand, in what areas are they supporting demand? And I wonder also about the likelihood that, unlike the Philippines, Bangladeshi remitters are almost always male. You saw the statistics there, right? Whereas in the Philippines, there's a real mix. There's women and men who are abroad. So does that affect the spending patterns when they send the money home? Do women save or spend differently? Asan also showed us how the money gets to Bangladesh. And it's interesting that both countries have about the same numbers of money being sent through banks. So it's about 2/3. Then there are wide distribution networks abroad and in the country in Bangladesh, and there are steps being taken to move away from informal networks. So it might be interesting to ask some questions about that. Making investment facilities open for Bangladeshis is a fascinating concept, and the range of investments is very wide. I was very impressed by this. So, but what happens if they lose the money? Are there any risks? And how can a remitter oversee the investment or involve his family in that process? Then Asan talks about mobile banking on the bank-led model, which is different from the Philippines, and the setup of agent networks, which is a commonality between the two countries. So are the clients protected? Is the money sticky enough for the banks to get a benefit, or does the money come in and it goes right out again? Certainly that's been the documentation in Kenya and why the banks are less interested in that model. And finally, in Bangladesh, there's a discussion of other services, particularly loans to migrants and the Complaints Bureau. So what about pensions? Bangladesh may or may not have that program. Certainly in the Philippines, the OFWs do. And what about insurance? Because I didn't hear that mentioned, although I did hear it mentioned in the presentation from the Philippines. With regard to Pia's presentation, she started off with a very good set of data and graphs on Philippines remittances. It's important to this economy at 9% of GDP. But again, 2/3 comes through the banks. So what's happening the other third in both countries? And who remits? And remittances aren't saved as much as we might expect, although there are promising trends. I'm very happy to see that and encouraging of savings here. But what else do we know about this? Are there any rules about pensions or insurance or other risk management tools? What can we share about that and what works? Then Pia moves into some very solid information and flows on the nature of financial inclusion. I love those slides, they're great. And she shows us that a wide range of products remitters can access, including 4 types of loans: microinsurance and savings. You know, one thing we don't talk about with financial inclusion is that I'm seeing in my own country of the United States is that better financial inclusion also encourages social stability and a sense of fairness when you have access. I'm a bit worried about the decline in profitability of the loan products in the Philippines. You saw the table, and the increase in delinquency. So how are migrants learning about these products, and what control do they have over the use of the loan when they don't live here? I'm very happy to see the expansion in cell phone use and penetration in both countries. We're all talking all over the world, right? In your countries too. Perhaps you in the audience may want to explore that a bit further for your own countries, particularly the increases in savings, what options there are to link to banks. And the Philippines is a world leader in regulation in this area. They had 67 countries visit them last year to ask them questions. So perhaps we can ask her to tell us a little bit more about that and what information you can get from her. I think I'll leave it there. There's questions and answers, and I'm sure you have plenty of them. Thank you very much.